What is up, investment family? My name is Forrest. I am your money therapist, and I'm here to get you right. Achieving financial freedom should not be so complicated. It should not be so hard. About a year ago, I started investing $50 every single day into a Robinhood account to show you with real live money how easy it is to start investing for your future. Now, if you don't have $50 to invest every single day, maybe you only have $50 every month. I'm going to show you the math on that in this video. It doesn't matter how much you have, it matters what you do with what you have. It is my passion and purpose, I believe, to help as many people achieve financial freedom, right? Finance and money and math is something that I've always been good at, and it's something that a lot of people struggle with. And so I consider it my goal here on earth in this lifetime to share what I know. Before we get too deep into this, please go ahead and hit the subscribe button. I promise I'm only bringing value to here on your relationship with money. Let's jump into the account, take a look, and I'll show you exactly why you should start doing this hopefully right now. All right, so here on the left, we have my Robinhood account. Okay, it's a real account, no BS here. You can see, right, this isn't, generated or something. I don't know why no one's ever said it wasn't real, but I guess that's a real thing that someone could be worried about. Anyways, let's just go ahead and do this for now. So $16,418.15. I have a few holdings here on the right. If you've never seen Robinhood, first and foremost, you do not have to use Robinhood. Okay, Robinhood is one of many brokers. The reason that I use it for this challenge, despite not necessarily liking Robinhood as a trader, is because it's accessible. Okay, and I'm a realist, I'm pragmatic, and I know that it's fine for what a lot of you need, which is just a vehicle to start investing. So if you're curious about what app to use, there are things like M1 Finance, I think Stash, Robinhood, they're all fine. Okay, neither here nor there. If you want to make it as easy as possible, open up a Robinhood account. There's a link down below that you can use in the description of this video to start your account today, and you can follow along. Now, again, April 2024 is when I started this. This account's already at $16,000. Currently, I'm doing $60 a day, which is $300 a week, which is $1,200 a month. Most of that is right here in this holding called the Vanguard S&P 500 ETF. The symbol for that is VOO. So every single stock has a symbol. This one's symbol is VOO. So why VOO in particular? Well, VOO is what's known as an exchange traded fund. Exchange traded funds are a basket of stocks. So instead of you having to go and say, hey, I want to buy Apple, I want to buy Microsoft, I want to buy Tesla, I want to buy this and that, okay? Some other company went and they did all the work for you. And they said, hey, instead of you investing all those things, we did the work, you just buy us. So that's what I'm doing. I'm buying a piece of a Vanguard company, and that Vanguard company, literally the only thing that it's in the business of doing is buying the 500 biggest companies in America. It's a really, really simple way for me to get access to all these stocks without having to do all this work. Make sense? Cool, I love it too. Now, the other flip side of that is that I know, okay, historically in the markets, that the markets do 8 to 10% compounded interest annually. If your eyes is glazed over, you're like, Forrest, what the heck is compound and what the heck is interest? Well, I'm gonna show you the math on that. All that means, compound interest is just basically saying that your money grows by itself. Due to the power of inflation and a few other things, the markets, companies make more money. These companies become more and more valuable every single year, which means that the value of your stock in those companies goes up a little bit every year. Now, the market does have downturns, but overall, over the long term, okay, America has had the most consistently profitable and strongest economy in the world. And as Americans, it's where we're gonna invest. There are tons of outlier cases. I'm not going to call all of those out in this video. What's most important is the consistency, right? And in fact, when the market is down, that's actually the best time to start investing. The strategy that I'm using in this account is actually called dollar cost averaging. I just put $60 in every single day, regardless of what the market is doing. When the market is at its highs and things are most expensive, I'm still buying. When things are super low and they're cheaper than they've ever been, they're on sale, I'm still buying. So that's what I'm doing here. You can see my average cost of all these shares is $526. Okay, my total return is $507. And it is 75% of my portfolio. So it's most of my portfolio. If I had started this challenge and knew exactly, what I wanted to gear this for when I started, 100% of my portfolio would just be VOO. I have a few other holdings that are left over from when it started, and I just don't want to sell those, for tax purposes and whatever. And that's totally fine. So as I scroll down, you can see what is in this fund. I mentioned that this is a basket of goods. 31.71% is tech. 13.98% is financial services. We've got healthcare, consumer cyclical, on and on. So this is what you're buying. And then you can also see the individual companies, again, that this is comprised of. Remember, VOO is just a company that goes and buys other companies, and I'm buying that company. Don't get confused. It's actually supposed to be really, really simple. So why do we do this? Okay, the reason that I do this, we're gonna go to our compound interest calculator. If you wanna get this for yourself, just go into Google or whatever search engine you use and type in compound interest calculator and then find the one for investor.gov. Your screen should look very similar to this. So imagine you start today. We'll go through this together. I do this in every single video, by the way, right? Very, very simple. I want you to see the power of compound interest. Your monthly contribution, let's say it's $50. Let's say you're that person, you can only do $50 a month. And let's say you're a young person, maybe you're 18 and you have a long time, right? Let's see, retirement age is still 65. So 65 minus 22, say you have 43 years, okay? Just graduated college or you're 22 for whatever reason you're that age. Estimated interest rate, we'll leave at 8%. And the compound frequency, we're going to leave it annually. Let's not futz around with this. I don't want to take too much time, but just keep the math simple, we'll do annually. So let's hit calculate. Okay, now in 43 years, assuming you only did $50 a month, okay, not a week, a month, you would have $197,000 when you're 65. Now, here is the immediate pushback you're getting. Forrest, you're telling me after all these years of investing, I only have $197,000. And the immediate thing that I have to say to that is I want you to go to every single 65-year-old person that you know, all of them, and see how many of them have $200,000 of liquid cash in the market or whatever. Some do, right? And maybe you're coming from a family who's already doing the work and they've done that, and you owe it to them to continue to do that good work. Okay, now if you come from someone like me, where my parents did not have the opportunity to invest for a lifetime, I personally had to figure it all out for myself. You owe it to yourself and for the people around you. And you can become a beacon and example for those around you, your peers, okay, by starting this. You will literally inspire other people, okay? So that's doing it, at $50 a month. Let's assume you do $100 a month, okay? Calculate. Now you've got $395,000 a year. Okay, if you get $1,000 a month, get a few raises, you work hard, get a side job, now you've got $4 million. You can see here how it's really powerful. So instead of going and buying, that car or whatever it is and getting that 89-month loan for $1,000 a month, start investing in your future and you'll have a couple $1 million. Here's the other part of this, right? Along the way, you still have this money in the bank, okay? You still have all this money in the bank. Money gives you options to buy a house, options to do a speculative investment. Maybe somebody comes to you and says, hey, I have an idea for an app. I have an idea for XYZ. I want to get into real estate. Luckily for you, you've been investing for 10, 15, 20 years. You have money. So you could take some of that money that's been chilling and just honestly is a very conservative investment. Now you can speculate with it. That's totally okay. I may know somebody who has done stuff like that, okay? And that's fine. But you know what sucks? What sucks is when you have the knowledge and you don't have the money and somebody comes to you with an idea and they need your knowledge and your money, but you only have one, not the other, or you don't know anything and people are just looking for money. And if you had the money, you could just get in, but you don't have that either. That sucks, okay? And the only way you're gonna solve that is for yourself. Nobody's gonna save you, I promise. I'm still looking for a superhero myself. The only one I found is in the mirror. So, oh, by the way, let's do the math on my investment, okay? My investment will do where it's at right now. It's at $16,400, okay? I'm doing $1,200 a month, okay? And I have 31 more years before I reach my retirement age, okay? You can see that this account will be worth $2 million. So the time is really an important factor here, okay? Even though I'm doing $1,200, I only have 31 years in here. Okay, if I increase this back to 43, you can see here it goes up to 5 million. So compound interest, the idea that your money grows on its own, is critically important for this long-term investing. So let's look at some of the other holdings here. We'll go back to my account overview right here. So I've got VOO, I've got Palantir, NVIDIA, Microsoft, TSM, SoFi, MicroStrategy, and Rivian. So Rivian is the one big outlier in this account. I really like Rivian as a company. I love that they're an American company, okay? Despite all of our problems, I really like my country, okay? I am American through and through. We got some stuff to fix, but neither here nor there. That's what that video about. I really like Rivian, okay? I like their story. I like that they're not Tesla. Okay, I like EVs. EVs are obviously the future. Okay, they're here now. Every company is getting into EVs. And yeah, I like that they're super cheap right now. And so I'm making a bet on the long-term price of this. I think just like Tesla, okay, once this company finds their footing, maybe it takes 10 years, this stock price could easily get over $1,000 a share. And that's what I'm betting on. So I have quite a few shares in this account as well as my personal big boy account. Thanks for joining me on this weekly update. If you have questions about investing or if you started, please comment down below. Go ahead and hit that subscribe button and the notification bell so you don't miss the next drop. And Also on this channel, I do interviews of entrepreneurs and high earners and just cool people that I want to talk to. And I go through their relationship with money. Check those out. They're pretty good conversation. It's basically my journey as a philosopher revealed as a podcast. Nonetheless, see you in the next video. Peace.